So let's go to the data before we get to charts. We're expecting our April read on Chicago PMI, and here it is, and it is not pretty. 52.6, we're expecting a number over 58, sequentially 58.7. 52.6 is the lowest level, and we're going to be going back a ways. That'll be the lowest level going back to January of 17. January of 17 when it was 49.9. Now, you know, we need an asterisk here because obviously at 49.9 you're into contraction mode under 50. 52.6 is not a good number, and it's basically 6 under the previous, but it is an expansionary number. We'll have to, of course, monitor. We know that the PMIs seem to incite some trading in Europe, and indeed they're important. They're certainly not going to give you the definitive clue, but of course we're going to steer towards trying to see how this all fits into the grander scheme of data and, of course, the Fed. Let's get to the charts in the market, shall we? We see interest rates easing back a bit, virtually steady, a little lower on some maturities on the first day of a two-day Fed meeting. Look at a 1 week of 10s. It really says it all. You know, we're bumping along right around 250. We've dabbled intraday into the 240s. We certainly have lost the big top up at 260, 261 on that trade. Now, Boons today popped a bit. Maybe it was their GDP numbers didn't disappoint too much. You see a two-day chart there. We were hovering negative not that many sessions ago. Lightly positive, 0.304 basis points. Now, back to our 10s. If you look at a month to date, you can clearly see what I'm talking about, the way we've rounded down a bit. And definitely the perception is relative value trade, pressures from Europe, issues with global growth, and our own data sometimes can be a bit spotty. There's also a big demand side for treasuries at this point. Dollar index, it was on a tear. Look at the 1 week chart. We circumvented and went higher than 98 when the old story used to be 97, but we reversed a bit. Look at a year-to-date chart. You can clearly see the way we've given back some of the best levels that we had seen since May of 2017. And we want to definitely monitor what's going on in the euro currency because that once again has overtaken the 112 handle.